Welcome back to BLOCKTV, and you're watching BLOCKTV Bites, where we get to hyper-focus on one aspect of the crypto sphere and then break it down a bit. Cryptocurrency exchanges around the world have been experiencing a steady drop in traffic since June, suggesting declining interest by retail investors. This according to research conducted by the Block Crypto. 37 exchanges and their monthly traffic from April to September, which is the latest available data, were analyzed and found that traffic has declined 37% since June. Exchanges analyzed included the big ones like Coinbase, Binance, BitMEX, Bittrex, Kraken, Bitfinex, and Poloniex, amongst others. Coinbase, Binance, BitMEX, and BitHum combined garnered more than 50% of the total number of visits. In September, the analyzed cryptocurrency exchanges cumulatively had monthly visits of 103.6 million, while in June, that number was more than 150 million. On the top of the list in terms of that traffic chart is Coinbase, which had the highest number of estimated visitors during April to September, with about 157 million, followed by Binance with nearly 148 million. The report further notes that this decline in traffic coincides with lower traded volumes since June on these same cryptocurrency exchanges. This news follows a report conducted by Larry Cermak in early October, the same reporter who looked into the decline in exchange volume, that claimed that even though there has been a 43% decline in the 4 months prior, the market cap of exchange tokens still grew by 255% since the beginning of the year. Binance's BNB was the largest exchange token by far, with a market cap of $2.7 billion at the time, sitting at a current $3.1 billion, more than 3 times larger than that of Leo. Further findings suggested that there appeared to be a clear correlation between the market cap of exchange tokens and trading volume. In addition to this, exchange tokens were considered to be effective at providing exposure to the growth of volumes on the underlying exchange. The curious matter is if those two elements cancel each other out in any way. Months ago, the crypto sphere went crazy when a report conducted by Bitwise revealed that 95% of exchange volume is actually fake. The TIE, a crypto company that collects sentiment data, released a similar report digging deeper into this problem within the sphere. Take a look.
The number that was cited in there, almost 90% of cryptocurrency exchanges report trading volumes that may be inaccurate. And that's quite a high number. Did it surprise you?
I think the extent to which some exchanges were doing it really surprised us. One of the metrics we looked at was the amount of website viewership that these exchanges had and the volume that was traded. And we basically looked at the average traded volume per website visit. And in some cases, the exchanges were reporting $50 per website visit. But what was really shocking was when some were reporting $400,000. That was just, I mean, it was just mind-boggling. It was just like, you know, why isn't this being talked about more? It just doesn't make any sense. So, I mean, I guess the extent to which some exchanges were doing it was a little bit, you know, more than we expected. But the fact that exchanges were wash trading, the fact that they're spoofing in order books, that wasn't really surprising to us.
With this information in mind, could the decline in exchange volume actually be a symptom of exchanges getting their act together, as opposed to suggesting that the decline is due to the lack of interest by retail investors? The space runs on hype, and this could be a case of things looking worse before they can get better. But we'll find out more as time goes by. Now, that was Bites for today, BLOCKTV Bites. Keep on watching for more cryptocurrency, blockchain-related news.
For more news and updates, follow us on Twitter.